The end of idle Bitcoin. Bitget just fundamentally changed the architecture of idle Bitcoin capital with a single protocol upgrade to its BGBTC wrapper. For years, the trade-off was absolute. Keep your Bitcoin secure but inactive, or deploy it into yield-bearing decentralized finance protocols and accept a massive escalation in smart contract risk. The new BGBTC upgrade, which rolled out on July 31, 2026, collapses that trade-off by engineering a way to pay out daily Bitcoin-denominated rewards while maintaining a strict 1-to-1 backing 1.1.4. The mechanism allows traders to use this productive asset as collateral for margin or loans, all while yield accrues underneath. Fixing the bridge problem. To make this capital genuinely efficient across networks, Bitget integrated Chainlink cross-chain interoperability protocol. Instead of relying on a standard multi-signature wallet to move value, CCIP acts as the canonical routing infrastructure, stacking directly on top of Chainlink proof of reserve. But bridging infrastructure is only half the architecture. The other half is who actually decides where the yield comes from. The Curator Framework. Centralized exchange yield has historically been a black box of directional risk, where users had zero visibility into how their deposits generated returns. Bitget is attempting to fix this structural flaw by introducing a Curator Framework. They handed the design and execution of the on-chain yield strategies over to Gauntlet, an independent risk management firm. Gauntlet acts as a core curator, managing the deployment of the underlying assets into specific markets to generate yield. By separating strategy execution from exchange custody, the platform creates an institutional-grade firewall against unchecked risk, which points to a much larger structural shift in how institutions are approaching idle collateral. The real implication. The era of viewing Bitcoin as a purely static reserve asset is functionally over. The mechanics we are seeing with this BGBTC upgrade reveal a convergence of decentralized infrastructure and centralized exchange utility. By combining Chainlink CCIP for secure multi-chain routing and Gauntlet for managed strategy execution, Bitget is turning idle reserves into highly productive collateral. For traders and funds, this changes the baseline cost of capital. When you can park collateral in a unified trading account, use it as margin for derivatives, and simultaneously collect a daily yield settled in the native asset, the opportunity cost of maintaining raw, unproductive Bitcoin on a centralized platform becomes too high. The platform has effectively bridged the gap between decentralized finance yields and centralized exchange liquidity without requiring users to navigate separate protocols. The specific next indicator to watch is how quickly competing centralized exchanges are forced to adopt transparent, third-party risk curators, just to prevent a mass migration of institutional liquidity. Subscribe for more.